Welcome back to the channel, Crypto Trend Trader with a quick market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I just wanted to do a quick update. I've been taking a little time off to enjoy myself and lifestyle as well as my gains, and also taking care of positioning myself for essentially the end of year, end of quarter, end of half. There is a lot of key decisions to be made and shifts in portfolios, markets, etc. Often you will see, in my experience, that this will be a pivotal point, essentially, as this is the end of the tax year and everything. So you have to lock in those gains, report gains, losses, all that stuff. So you want to do quite a bit of accounting mathematics to prepare yourself to decrease those taxes as much as you legally can, as well as positioning yourself for the future and whatnot, making key decisions on where to have your assets and how to allocate your capital as well. So before we get into that, I did want to talk briefly about the S&P and Tesla getting added in. I know that's like a huge event and everything. Tesla has been running up all year, honestly, but especially recently since the announcement and everything. And I've heard quite a few people talk about how quite a few institutions, news, people, etc., influencers talking about how everybody has to buy Tesla now because Tesla's getting added in. Well, Tesla is also the largest market cap company to ever get added into, to essentially this fund. So there's two ways to look at this. If you already own S&P and a massive weighted market cap asset gets added into it, you're required to rebalance what you own inside of this mutual fund or inside of this index fund to essentially absorb that much Tesla so that it balances back out, because you're required to, everything is weighted, let's say that Tesla makes up, of the 500 stocks, it's not just 1% and each of the 500 is weighted evenly. Tesla might make up 5% or 10%, depending on if it's that or something else. But essentially now, if you have $1 million S&P index fund, you would now have to have inside of it 50,000 of that would have to be Tesla, or whatever the percentages are, etc. But the point is that it creates what people think is going to be this massive rush into buying this stock as it's getting added into the index fund. Therefore, all these companies now that own will have to own part of Tesla as well. Well, it works both ways. You can also sell that index fund. So if you need to have 5% and you have $1 million in it all of a sudden, and you only have 1%, maybe you sell $800,000, and then now that 1% before equals 5% now because you own 80% less. And often the way people outperform index funds is by buying key stocks like Tesla before the index funds absorb them, so you can outperform the market because this is not part of the market and it's performing extremely well. So then as it leads up, the price pumps, and then you sell into it and have less of that stock or less of the index fund, etc. So just a key point that I wanted to make, as everyone is expecting now like a massive rip from Tesla, and often it's buy the rumor, sell the news. So when we got the rumor that Tesla was going to be added in, we got the news that Tesla was going to be added in, now it's been running up leading up to it. I'm not saying there won't be another pop, but I'm expecting a massive sell-off in the near future, into this year, etc. So although I am overall bullish on Tesla and Elon Musk and the idea of it, if you start looking at actual technicals, fundamentals, you start looking at price to earnings ratios and valuations based on sales and PE and all that stuff, Tesla is extremely overvalued, as is the majority of the U.S. stock market, as were many other markets, stock markets around the world, are not necessarily overvalued. And we spoke specifically about this before, about how if you look at the valuations from 1 year ago and you look at PE ratios and you look at standard ways that we valued stocks, and then you look at earnings for this year on the majority of these stocks are down 20%, 50%, 75%, 95%, and then you look at the prices and they're the same, what that means is that the PE ratio is massively different. So if something was worth $100 a stock before and the PE ratio was, a smaller number, and then all of a sudden earnings go completely down, but price stays the same, the PE ratio now is massive because it's a division essentially. Like if you take 10 and divide it by 5, you get 2, but if you take 10 and divide it by 2, you get 5. So in many cases, these companies are overvalued by 20%, 50%, 500% in comparison to the same metric the previous years. And I understand that, a lot of investments are speculative and they're looking at 6 months out, 2 years out, 5 years out. There is still quite a bit of uncertainty in the world, in the United States, in, the universe. So let's not quite get ahead of ourselves here and start speculating because money is cheap. So therefore, we're reckless with it because we know in time our investments will pay off. More often than not, it's the opposite. You're using cheap money to fuel a bubble, to fill a bubble up before it pops, anticipating that those who are resilient, those who don't need that money, those who don't need that capital, those who don't have to repay those loans anytime soon or have a ton of capital on their books or at hand or in their bank accounts, can suffer through, the time capitulation or price capitulation event and continue to buy into these assets and speculate, as they turn downward versus the people that, buy in essentially at the top or late in the party and then get stuck holding the bag. Because here's a specific example to tie it back into crypto, and then we can move on here. If you bought Bitcoin at $20,000 3 years ago, most people sold because they got wrecked along the way when it went down to $3,000. So they lost a massive percentage. If you bought January, XRP for instance, and it was $3, and then it went down to 25 cents, you lost 90+% of your capital if you just, value, if you just held. But eventually you get back up and it hits 60 cents again, and now, I'm only down 80% now, so that's great. I doubled up. That's still horrible. So my point being is that there's price capitulation when the price goes down real low and people get scared and sell. And there's also time capitulation where, things drag on for 3 years and eventually people sell. But in all actuality, eventually, typically, markets continue to go up and then they retest eventually, all-time highs. So in Bitcoin's case, not quite in XRP's case or Ethereum or pretty much any of the cryptos that have been around, with the exception of, a handful like BNB coin or, a very, very small percentage of cryptos have ever retested their all-time highs the way Bitcoin has and broken through. Traditional stock markets and companies and investments do, because the markets are designed to go up over time through inflation and the addition of population and monetary theory and whatnot. So it's very important to understand that there's time capitulation and price capitulation, and just because people, corporations, millionaires, billionaires, trillionaires are speculating out into the future years and years and years because of money is cheap or loans are cheap, does not mean that average Joe is going to be able to survive through a recession, depression, complete change of the way that society functions. So I think that's very important to pay attention to. And typically inflection points or flips in the markets happen around the quarter, the half, or the year, especially with tax years and everything changing, because it's in your financial best interest or whatever to make those changes around that time. So if you're going to get taxed differently if you hold an asset for 1 year, typically the cycle is going to be December or January is when that year is going to come up. So that's often when you'll see consistent moves, pumps, dumps, etc. So if you're expecting a potential flip in a market, typically you will go up into one of these events or go down into one of these events, and then that time period will be the flip, the support, the resistance, etc., and then you will alternate. So based on Bitcoin's previous trend topping out, essentially in December, alts topping out essentially in January, gives you an idea what I'm talking about. And then also, obviously, it's the same case for many traditional markets as well. As obviously like taxes are a big factor, and people manage their portfolios based on quarter, half, and yearly. So I'm paying very close attention to that. We have had a phenomenal year of gains in just about every asset. It's very unfortunate some of the other things that have taken hold, but the uncertainty is definitely there politically. With the big V, with the economy, with potential recession, depression, all the different things that are going on right now. There's a lot of uncertainty, and we also have like those macro effects, like the 100-year cycle, and the boomers potentially like aging out of markets. You have a bunch of new money printed. You have a bunch of young people that are speculating on these assets and these markets for the first time. And much like what happened in 2000, you rope a bunch of young people into these things at the all-time high and then dumps down massively, and you lose 20%, 50%, 60, 75% of your investment, and then you're burned on these for, long periods of time afterwards. But it gives you an opportunity to, right now, there's specific laws in the books that are getting ready to expire in the United States about how you can remove money from your pension fund or from your 401k, without taking penalties. People speculating that taxes are going to be higher in the future than they are now. So all of a sudden, there's an incentive to go ahead and pull money out of these markets, take profits, close positions, ease speculation. So definitely paying attention to what's happening here in the next week or so as a key inflection point, and specifically around the holidays and end of year and everything. So, but I just want to touch on that. I just wanted to say hi to everyone, and hope you guys are enjoying your gains. Hope you're taking profits along the way. I hope everybody has had a good year despite everything, taking that time to educate themselves, to further themselves, build a business, create a different form of wealth in the form of knowledge or financially, outside of the system, outside of your typical, 60-hour work week or whatever you're normally putting in. So just wanted to touch base with everybody. I am, optimistic of the future and price action on crypto and traditional markets and gold and silver. But I am also, intelligently optimistic. But overall, I think short term, I'm starting to get very bearish on a lot of these assets, just because we've had massive runs, massive gains, and the bubble is extremely inflated right now and potentially getting ready to pop. Now, I'm not saying it has to pop right away. Congress is passing like a $1.5 trillion government support bill right now, $900 billion stimulus, or whatever you want to call it. At this point in time, it's more like pity money to keep people alive from rioting in the streets. But essentially, that's like $2.5 trillion that they're getting ready to pump out. It's a lot of money. It's a lot of M1 created, like between, depending who you ask, 25 and like 32% more money in circulation right now, or more currency in circulation right now, I should say, than ever this year in the United States. We have got a lot going on right now, and it makes sense to own some hard assets, in my opinion. Gold, silver, a home, pay down high interest debt, keep some money in your savings accounts. It's not financial advice. I'm not your financial advisor. Your markets are extremely volatile. Please do your own research, trade responsibly, make smart decisions. Don't get greedy. Don't FOMO. But yeah, there you have it. I just wanted to touch base. I was seeing a lot of divergences in fundamentals, in technicals, in valuations, in price action, on shorter time frames, on longer time frames. We are at key inflection points based on like the time of year. I'm expecting a massive move in the very near future, and I think it's going to catch a lot of people with their pants down by surprise. And I think a lot of people are probably going to either lose or lose out, depending which way it moves. But just protect yourself, make intelligent decisions, take some profits. Like, you know, I've always been, number one is protecting your capital. Number two is locking in gains. I mean, you can't trade what you don't have, and it's profits aren't real until they're realized. So I am taking generous amounts of profits. I am positioning myself for the near and far future. I'm taking advantage of what's being easily given and protecting what I've worked hard for. And I suggest everyone else does the same. Again, not financial advice, but just look to the future, look to the possibilities. Are you ready for a 50% burst to the upside? Are you ready for a 50% burst to the downside? What would you do if you knew it was going to happen? What would you do differently if it happened and you did not position yourself accordingly? I think right now is a great time to have plenty of dry powder and minimum amounts of high interest debt. Definitely makes sense to me. I think it's important to have food. I think it's important to have cash. I think it's important to be diversified. I hate when I hear people saying I'm all in on XRP, Ethereum, Bitcoin, silver, gold, S&P, Tesla, whatever it is. I think it's a horrible, horrible thing to say you're all in on anything. This is not betting. This is investing. This is, speculating. This is, storing your wealth, positioning yourself for the future. This is not a casino. You should not be all in on anything, nor should you be all in on anything at the casino, in my opinion. But be very careful out there. Take some time. This is the holidays now. There's a lot of bad news, media. There's a lot of horrible things going on around the world. In our country, a lot of political division, decisiveness as far as politics, as far as religion, as far as everything going on. I think everybody should just take a step back, relax, enjoy your family over Skype, over the phone, write them a letter, whatever it is. This is going to be a weird holiday season for everybody. This has been an absolutely weird year, and there is no reason, in my opinion, to think that all of a sudden things are just going to change around and 2021 is going to be, as they like to say, back to brunch. I do not think that all of a sudden everything's just going to go back to normal. I think that people are going to realize, if anything this year, that things are not going back to normal and there's going to quote unquote be a new normal, and the world has changed quite a bit while we were all locked in our houses, worrying about this, that, and the other, and hoping and wishing that we were going to get back to our regular lives. I think a lot of people wasted that time, not educating themselves, not taking advantage of that additional time to further themselves financially or intellectually. How many books did you read? How many skills did you learn? How much money did you make? People have gotten extremely lazy, some not by their own choice. I understand that, most people work extremely hard and have been working extremely hard for their whole lives. So it's nice to sit back and, get a handout or get some kind of supplemental income or work from home or whatever the situation is. But people have developed a lot of bad habits. I think a lot of people have probably gained weight, stopped exercising, stopped eating correctly, definitely stopped socializing. We are moving overall in a bad direction through no fault of our own, through, you can argue that things could have been handled better by governments, by 1%, by whoever, but in all actuality, it is what it is. You're not going to be able to change everything, but you can change how you respond to these situations, and I think that's extremely important. So that's it for today. I'm not going to get deep into a bunch of technical analysis. I wanted to talk a little bit more about long term, about positioning yourself, about making intelligent decisions. I think that people should be taking a little time away from the charts and not focusing as much on trying to capture these little micro moves and what's going to happen next and everything. You should have been in position for all these situations long, long ago. Shouldn't be FOMOing into them now, because like I said, valuations are extremely high, prices are extremely high, uncertainty is extremely high, and I think there's going to be a massive, everything is overcrowded right now, and all these bubbles are super inflated, and I think we're looking at a record-setting bubble pop scenario. And protect yourself, protect your family, make intelligent decisions. Try not to speculate. Try not to wish, hope, dream. Maybe Bitcoin is at $250,000 at the end of the year, and that's great. But I don't think buying in at 24,000 plus dollars, just because you're hoping that it goes to 250,000 is a good idea, or because somebody else did. I think one of the main things about crypto that people forget is that all these massive companies that are buying in, and you hear about these huge numbers, $100 billion, $200 billion, $500 billion, those are typically small percentages of their capital on hand. These companies are putting in 1%, 2%, 5%, some even 10%. That's a hedge. That's a hedge against the system. That's a store of value, speculatively. It is not an all-in bet. And say we did get another 2017 scenario and we get a 90% sell-off or 75% sell-off, a lot of these hedges will look at it as a fail, will look at it as a mistake, and will exit in a hurry. So it's not as much a hedge against downside potential as it is upside potential. I look at it as a hedge against hyperinflation or a complete shift in monetary policy or society as we know it or whatnot. I don't think it's a hedge in the same way that people think it's a hedge, as in like I'm hedging my bets like the same way I hedge in gold. It's more like if the system fails, this could be the hedge that saves my ass. More so than this is just like a hedge in case the S&P sells off and crypto doesn't, or crypto sells off and the S&P doesn't. Be very careful out there. Protect your capital. Realize some of those gains. Buy something nice. Pay off some debts. Whatever the situation, just be smart. Make legit decisions. Step back and think about the best case scenario. Step back and think about the worst case scenario. And then make your decisions at least partially based on those two scenarios playing out as if you knew they were going to play out. Tomorrow, 6 months from now, 5 years from now, or 10 years from now. And that way I think you'll position yourself the most intelligently, because you'll have taken into account every scenario that you can possibly think of, without knowing which one is necessarily going to happen. You'll have already thought them through. And then if the trend changes in one direction or the other and those things start playing out, you'll already have a contingency plan in place for if all of a sudden everything starts massively pumping or everything starts massively dumping. You're not just making decisions on the spot, based on something that's already happening without having your right mind. Because if you sit here at your computer or you read or you listen to articles or podcasts or whatever, and you think out the scenarios and you write down a contingency plan or trading plan or investment plan or whatever you want to call it, plan for, escape plan for food or guns and ammo or protect your family or bug out, or market exit or take profit, whatever it is, the more plans you have, the more prepared you're going to be if one of these situations pops up. Because you'll remember that somebody was talking about black swan events way back before this happened on this channel. When I first started it up, before anybody knew any of this was going to happen, I already had planned for black swan event, was already talking about all this stuff, talking about, massive change in all this stuff. And that's left me extremely well positioned through all of this. And I suggest that if you learn one thing, from me, that it's that take into account all scenarios, have a contingency plan, and then that way you can make educated, smart, pre-thought out decisions, and then you can alter those decisions. You can improve on your plans or whatnot along the way. But number one, invest in yourself, invest in your education, and take care of your family. Protect your principal, realize those profits. Crypto Trend Trader. Oh, and make sure you subscribe, like, share, all that garbage. I hate asking for all that stuff, but I got a lot of people out there that watch these videos all the time that I know don't subscribe. And if you're going to continue watching them, you like the content that I put out, it costs you nothing and it shows your support. So give me a subscribe, and more importantly, on top of that, I want to know where everybody's at, because this is a channel that's got members and participants and viewers all over the world. If you could just put what country you're in or what state you're in or whatever in the comment section. I really appreciate that because I want to see like where I'm reaching people at, where everybody's at. I know a lot of people don't like participating or would never leave a comment. Doesn't take anything. Nobody cares where you're at or whatever. If you feel uncomfortable, just put what continent you're on. But I want to know. So let me know, guys. Crypto Trend Trader, and I'm out of here.